Perkenalkan, saya Ricci dari Divisi Wealth Management BCA, akan menjadi moderator untuk sesi hari ini. Bapak Ibu, sebelum kita mulai, mungkin ingin berterima kasih juga kepada para partner BCA yang sudah menghadirkan para narasumber. Ada Bapak Mark ini dari Manulife dan base-nya dari Singapura. Kemudian ada Pak William dari Franklin Templeton, adalah partner dari Batavia, Bapak Ibu. Ini dari Singapura juga, dan juga Pak David dari BNP Paribas dari Hong Kong. Nah, ini memang tadi Bapak Ibu sudah lihat juga CV-nya, pengalaman kerjanya, ini luar biasa Bapak Ibu. Orang-orang yang memang sering muncul di Bloomberg dan beberapa news outlet lainnya. Nah Bapak Ibu, sebelum kita mulai sesi hari ini, izinkan saya untuk memutarkan video 8 detik AI generated by Google Gemini, supaya kita bisa lihat konteks daripada sesi hari ini. Dan sesi sekarang akan lebih banyak membahas tentang strategi investasi Bapak Ibu. Jadi penjelasan pasar, pergerakan equity dan juga bonds. Baik, mari kita saksikan. Baik, izin menjelaskan Bapak Ibu. Inilah gambarannya, pasar saham, pasar obligasi terus melanjutkan kenaikan, luar biasa naik terus di tengah ekonomi yang sebenarnya sangat struggling ya. Nah, mari kita bahas lebih dalam. So gentlemen, this video is picturing what is really happening. The economies have a lot of problems from geopolitics. We have record high debts, and then slowing economic growth. But then the market is doing just perfect, right? So what is your diagnosis? What can cause this to happen? I'll start with William. Thank you.
Thanks, Richie. Yeah, that's a great way of kind of summarizing things. Now, at least with regards to the U.S. markets, you know, there are some of the headwinds that you mentioned. Inflation is a concern. Certainly, the ability of the jobs to continue growth in recent weeks has slowed down a bit. But overall, you know, we're still positive. We think there's still a positive aspects with regards to the U.S. economy. And we see that a little bit both within, you know, certainly small business optimism, which continues to reach new highs that we saw since the start of the year. And then separately, when you take a look at the consumer, which is about 2/3 of the GDP in the United States, that continues to remain on track. Despite a slowing jobs picture, we saw retail numbers come out last night that were actually quite positive. Year on year, retail sales is up about 5%. So there's still reasons to remain positive on the US economy. Continues to remain a pretty strong growth driver. And stocks being a forward-looking discounting mechanism continues to reflect some of that optimism. Really quick, I'll just touch on a couple other points that we think are driving U.S. returns. Certainly, the current administration under the Trump presidency is deregulatory in nature. I can go over that in a little bit more detail later. But overall, we think there is an administration that is pro-growth and pro-America.
Right, thank you. It's your turn, Mark, please, thank you. Mark.
Yep, it's really been quite an interesting year so far. If we go back to April, we had that very sharp correction off the back of the Liberation Day tariff announcements. And since then, we've pretty much had a V-shaped recovery, a number of asset classes at all-time highs. A couple of things to point out. Markets don't like uncertainty. And with the Liberation Day announcement, that injected a huge spike in policy and political uncertainty on top of what was already a volatile geopolitical environment. But since April, a number of trade deals have been struck, albeit in outline form, and there definitely seems to be a general theme of rollback, dial back of the tensions. And as a result, uncertainty, contrary to what we might be reading in the media, has been coming down. And that has helped to drive markets into rebound territory. In addition to that as well, financial conditions remain rather easy. And that's in spite of the fact that central banks around the world, particularly the US Federal Reserve, are maintaining a moderately tight monetary policy setting. Why have financial conditions remained easy? The first thing to highlight is that fiscal stimulus, government deficits remain close to all-time highs outside of recession times. Effectively, governments are taking over the role of stimulating the economy, and we think that that continues to be a theme for many years to come, and then there'll be question marks over the sustainability to that. In addition, oil prices have been moderate and falling, and that's a bit of a tailwind to both businesses and consumers. And then finally, just to echo the point, we have a US government which is pro-deregulation, pro-stimulus, pro-debt accumulation, and applying a great deal of pressure to lower interest rates. So all in all, that the policy mix is somewhat reflationary, but definitely long-term question marks over the fragility of the system. And with certain asset classes, whether it's US large cap equities, at relatively extended valuation multiples, markets are somewhat vulnerable to a shock. But in the interim, the cycle is generally supportive for the time being, but there are some emerging risks, particularly with growth slowdown and uncertainty over inflation as well.
Right, thank you. David, please.
Thank you, Richie. For the gentleman or lady who controls slide, can you please turn to slide number 1, please? For China, I think the question is actually a little bit complex. I think the technical factor definitely helps. Externally, this administration, what it creates is uncertainty. Uncertainty, people need diversification, and emerging market, including China, is an option. Secondly, the interest rate cut that we're talking about is also pro-growth. So China is also an asset class traditionally has benefited from that. That's the external side of the technical factor. But the internal side of the technical factor is actually what's happening is China's government also has encouraged a lot of money to get into the equity classes, not because they need to support the market by this action, but actually because of the strong performance of the market year to date, it also reinforces itself and generate a lot of interest these days. So these days in mainland China onshore, the deposit rate is very low. Basically, if you put your money in the bank, you earn almost next to nothing. So equity is some way to go. So this external, internal factor definitely helps, despite actually many of the macro factors in China is still very challenging. But also keep in mind actually something more happening. In the past, China's equity, people say cheap, you get into it, but cheap itself never is enough to suffice or sustain a market. This day, actually, what we have seen is, other than a variation, we see there's a flaw in the market because we've seen that governments really try to pull all the tricks off the hat, try to stabilize the market, that provide confidence. But more importantly, equity is an asset class that is story. For China, this year, there's a new story, there's a dipstick moment. Dipstick moment make people to awake and realize that actually beneath the surface of the macro, there's a lot of interesting things happening. So I would say that these factors together is really what is driving the market, despite the macro is really still very challenging. Thank you.
Alright, thank you. Bapak Ibu, saya izin untuk translate secara summary, Bapak Ibu. Tadi pertanyaan saya adalah kenapa kok ekonomi banyak sekali permasalahan, geopolitik, ada perang, ada trade war, semuanya lengkap. Tetapi kenapa pasarnya all time high, banyak sekali equity market yang mencatatkan rekor tertinggi di dunia. Nah jawabannya tadi mungkin pertama dari Pak Mark mengatakan memang sekarang financial condition itu adalah bisa dikatakan kondisi keuangan, apakah uang itu lagi mudah atau susah kira-kira gitu ya, likuiditas lagi bagus atau tidak, kira-kira seperti itu memang lagi sangat bagus. Kenapa? Karena pemerintah sedang menambah hutang. Apalagi negara maju itu hutangnya lagi besar sekali, lebih besar daripada negara berkembang. Dan di satu sisi bank sentralnya juga melakukan penurunan suku bunga. Jadi dari segi fiskal dan moneter, dua-duanya ibarat keran air dibuka Bapak Ibu. Makanya ekonominya sulit, tapi marketnya luar biasa, harganya naik semua. Dan tadi Pak William juga menambahkan, di Amerika itu walaupun ya inflasi masih cukup tinggi, tapi daya beli masih oke. Dan yang lebih penting dari pemerintahan Donald Trump adalah deregulasi. Jadi regulasi itu dipermudah sehingga bisnis jadi semakin bagus Bapak Ibu. Makanya marketnya juga di Amerika bagus. Kemudian Pak David tadi fokus ke China market, mengatakan di China itu memang karena Amerika, Eropa ya tadi negara-negara lain sudah naik tahun-tahun lalu, China tahun ini jadi naiknya tinggi sekali karena memang sudah paling murah. Sudah sekitar 3-4 tahun China itu selalu terpuruk pasarnya. Bahkan di tahun lalu banyak yang bilang China itu kita nggak bisa masuk, uninvestable. Tapi tahun ini ternyata market China itu bagus sekali Bapak Ibu. Karena pemerintah juga sama melakukan stimulus yang sangat agresif. Nah jadi untuk menyimpulkan tadi ya ada fiskal, moneter, keran air dibuka. Sehingga harga-harga saham dan obligasi itu naik. Saya izin untuk lanjut ke pertanyaan kedua. So the Fed will be having FOMC meeting in a few hours from now. They will be deciding, and about few weeks, for the past few weeks, market having like almost 100% conviction that the Fed will definitely cut, especially when the job data is very weak, right? Despite the quite high inflation, about 2.9, and a lot of people are thinking the Fed will cut up to 75 basis points to the end of 2025. So from now, about 4.5% to 3%-ish. So what do you think can fuel this rally even more? Because almost everything is priced in. Market is acting as if the Fed has already cut, right? Is there more legs for this rally? David?
Yeah, thank you. Please turn to slide number 3, please. I would say actually not totally pricing. Of course, the market also has a very good one year today. Some of that good rally because of the anticipation of the rate cut, but I would say has not fully pricing. Because we have to realize even for the US administration, there's so much debate within the Fed which direction to go. Do we have a too weak of an economy or actually the inflation is too high? So you can tell actually there's a high uncertainty which way they are pointing to, even though it's a rate cut, but how fast the rate cut shall be is actually a little bit unknown, right? So I think itself it points to the fact that because of this uncertainty of the policy, the market itself also has not pricing because no one knows how fast the rate cut could become. Secondly, is even for the rate policy itself, for the rate cut, I think the question is why we have this situation is because of the uncertainty policy for the US administration as a whole. So with that happen, I think there's a continued support from the technical factor of the lead for more diversification. I think is still a very important factor for China. So number one, the pace of the rate cut is uncertain. And secondly, even we have a rate cut situation, the need for the diversification is a longer term structural factor to stay and will continue to flow into this different market, including China. Last but not the least, actually, the starting point is also very different. After several years of very difficult market performance, actually, China is starting from a much lower base. So the rally itself is, while I always say it's in the beginning phase, rather than it is the end of it.
Okay, thank you. Willem, please.
Yeah, I agree with David. I don't think that the impact of rate cuts are fully priced in just yet. Certainly the pace is going to be one factor, and given how different things coming out of this administration could potentially influence the speed and pace at which they cut. But more importantly, when we think about growth drivers going forward, we're not necessarily kind of predicating our views on rate cuts. Sure, that's definitely one factor. But we think one of the things that the current administration brings to the markets is basically the productivity gains that are likely to accrue as a result of its policies. The administration has shown itself, at times it can be a little bit volatile in the way it passes policy, but it's all in a very pro-growth manner, and we think that some of these policies that they're currently putting through are actually going to be quite beneficial for growth. When we think about one of the aspects that they're keenly focused on, it's really the adoption of generative AI. And so anywhere between 20 to 40% is the estimate across different functions of how much more productivity generative AI can bring. So we think that's not necessarily priced into markets. And while the market is focused on what the positive impact of rate cuts are, some of the gains that we'll likely see as a result of other policies coming out of the White House, those may not fully be reflected yet. Now, when I think about this chart being shown here, certainly when we think about something like customer service, much higher penetration in terms of the impact from generative AI. But even if it's something like human resources, where you get a uplift of 20% in productivity gains, there's roughly about, call it 1 billion knowledge workers across the world, on average making about 50,000 US. So your total addressable market is something on the order of $5 trillion. Even if we were to have a 1% productivity gain as a result of that, that's $1 trillion that accrues to the global economy, which is something on the order of roughly 115 trillion, give or take. So we think what's happening in the US, specifically as regards to the policies that are supportive of generative AI, is something that the market's not fully priced in yet.
All right, thank you. Mark?
We think we're at the point in the cycle where, as a result of the policy easing that's being priced into markets, it's calling for a more diversified portfolio. And one of the manifestations of this loosening implied pricing in markets is a weakening dollar cyclically. And that's fueling risk appetite in assets outside of US bonds and equities. So think about gold year to date, one of the strongest performing asset classes. It's dollar denominated, but it's seen as a strong haven against uncertain inflation, geopolitical tensions, and an alternative store of wealth. In addition to that as well, certain emerging markets have performed very strongly this year, both on the equities and on the credit side. So Hong Kong, China equities are some of the strongest performing markets this year, Korea as well. You know, these are manifestations of a weaker US dollar seeking risk type behavior and market participation globally. And with respect to US assets, what you can say is that markets are assuming a relatively benign, gentle path for inflation. Hence, interest rate cuts being priced in 3 by the end of this year, perhaps another 3 next year, and a terminal rate of 2.753%. That's predicated on the assumption that US inflation will remain somewhat contained, even if it's slightly above the Fed's target. The question becomes, what happens if inflation starts to reaccelerate? And that's not really a monetary phenomenon this time. It was definitely a monetary phenomenon in the 2022 period because of the excessive stimulus that governments around the world put into the economy off the back of the COVID pandemic. It's now about fiscal largesse and the extent to which that is creating inflationary pressures in still supply-constrained parts of the economy, or at least it's fueling a degree of exuberance in terms of speculative activity. So that's really the potential risk factor is if inflation doesn't conform to market expectations, you could definitely see a shakeout and a repricing of assets across the whole market construct. Our base case is that inflation over the next 5 years is more volatile than it's been in the last 10 to 20 years and probably operates within a range which is a bit higher than it did in the last 10 to 20 years, but not necessarily a revisiting of the inflation dynamics that we saw in 2021 and 2022. But it definitely will start to pose some more difficult questions for policymakers, both on the monetary side and on the fiscal side. So that's a key thing to watch.
Right, thank you. Jadi Bapak Ibu, tadi pertanyaan saya adalah the Fed nanti malam ketika kita sedang tidur ya akan melakukan keputusan apakah menurunkan suku bunga atau tidak. Dan sudah berbulan-bulan kita menanti bertahun-tahun, tapi berapa minggu terakhir pasar kelihatannya sangat yakin the Fed pasti akan cut, probability hampir 100%, 0,25% pemotongannya. Dan pertanyaan saya tadi, apakah setelah the Fed cut marketnya akan berhenti lari? Karena kan marketnya sudah lari duluan sebelum the Fed cut. Pertanyaannya setelah the Fed cut, marketnya masih lari atau tidak? Jawaban tadi yang pertama mungkin dari Pak Mark dulu. Beliau mengatakan inflasi itu ke depannya mungkin akan lebih volatile, jadi masih bisa naik, bisa turun. Dan secara rata-rata akan lebih tinggi dari 10 tahun terakhir, kecuali zaman COVID. Tetapi kelihatannya ketakutan inflasi itu sudah tidak seperti 5 tahun terakhir. 5 tahun terakhir kalau Bapak Ibu baca berita pasti bahasnya inflasi terus. Kedepannya inflasi sudah bukan jadi ketakutan utama. Tetapi yang menjadi ketakutan utama nantinya adalah dari segi fiskal, dari segi hutang pemerintah di dunia, di seluruh dunia yang berlomba-lomba untuk naik Bapak Ibu. Kedepannya itu yang akan mendrive apakah the Fed masih bisa cut suku bunga atau tidak. Yang tadi Pak Devi juga katakan kalau yang sekarang cut itu memang sudah price in. Pertanyaannya nanti setelah September akan potong suku bunga lagi atau tidak? Dan potongnya seberapa cepat? Itu yang mungkin akan jadi pertanyaan selanjutnya bagi investor. Dan tadi ada diskusi tentang diversifikasi. Karena dolar aset, ya kita lihat US dollarnya sudah melemah, dolar aset naiknya sudah cukup tinggi juga. Jadi mulai investor melakukan rotasi keluar daripada pasar-pasar saham Amerika, masuk ke Asia, masuk ke Eropa, masuk ke Jepang. Dan diversifikasi itu cukup penting untuk bisa menikmati siklus ini. Dan tadi dari Pak William mengatakan kalau Franklin Templeton melihatnya lebih long term. Jadi tidak membuat keputusan hanya karena suku bunga turun atau tidak. Ya itu pasti bermanfaat bagi kenaikan harga pasar dan sentimen, tetapi yang dia perhatikan tadi di show juga slide-nya tentang generative AI. 20-40% more productivity. Ini selaras dengan yang tadi Pak Raden paparkan ya Bapak Ibu ya, di mana productivity kita itu bisa meningkat 20-40%. Dan itulah kenapa kita semua memang sepertinya harus belajar untuk mengadopsi AI baik dari level personal maupun dari level perusahaan. Baik, saya izin lanjut untuk pertanyaan berikut ya Bapak Ibu. Now my next question will be for Mark, because you are the multi-asset manager. I'll be asking about bonds. We are experiencing the biggest debt accumulation in decades, but widely expected monetary policy easing drives bond yields lower even than last year. So there is fiscal worry, but the rate cut expectation has just wiped everything out, and people are just focusing on the rate cut, and the bond market is actually experiencing a great rally. So what is the role of fixed income going forward? Because we know that monetary policy easing is coming, but then the yields is arguably low considering the amount of debts that will be accumulated for the coming years. So how should we position bond in our portfolio? Is it for income? Is it for capital gain? Or anything else? Thank you.
Yeah, it's a really fascinating time to be an investor in fixed income markets. There's a real shift in dominance of policy away from monetary policy, central banks, towards governments or fiscal policy. And that's having quite profound impacts on bond markets across the fixed income curves. In general, and there are sometimes exceptions, central banks tend to be able to affect the shorter dated parts of bond markets via monetary policy on the rate side. And it's really fiscal policy which has a more profound effect the longer and the further out the curve that you go. Some exceptions to that, but I go back to my earlier point. Actually, the US Federal Reserve has been running a moderately tight monetary policy in the last 2 to 3 years. Real interest rates are around 2 percentage points. That's typically above long-term equilibrium rates. They continue to shrink their balance sheet after all of these years as well. Now, whilst the Fed's balance sheet is much bigger than it was 15 years ago, it's probably about 25 to 30% smaller than it was in 2022. And that also represents a certain tightness of policy. So in some senses, that is helping to push down yields because it's moderating growth expectations in the near term. But what's working against that, as I mentioned earlier, is that governments, not just in the US, but also Europe and also indeed China, are targeting larger fiscal deficits in periods of economic growth. And that's leading to a widening supply and a growing supply of new bonds that are being issued by those treasuries to fund those deficits. And that's putting pressure on yields at the longer end of the curve as a result of what we call rising term premium. So term premium is the amount of return that a lender to the government demands in order to lend to the government for a longer period of time. Because of that question mark over the sustainability of government spending, because of demographic pressures, investors in bond markets, longer dated, have been demanding high yields. And so we've seen a steepening of the yield curve in the last couple of years. The premium of the US 30-year bond over the US 5-year bond is now something in the order of 100 basis points, 1 percentage point. And that's gone up by about 1% in the last 1 or 2 years. It's gone up quite quickly, and it's been quite a noticeable expression of being more confident buying bonds with shorter duration and avoiding those bonds with a longer duration because of that steepening curve. The reality is that we could see more steepening to come. Historically, sometimes that spread between 5-year and 30-year bonds has gone as high as 3%. Not necessarily calling for that as a base case, but it just gives you an idea about the context that we're in at the moment. So the first point about how to think about bonds is, for the time being, assuming the Fed can deliver the rate cuts that are currently priced in by the market, you probably want to be a bit more confident about investing in fixed income up to the belly of the curve, 5 years and below. And anything above 10 years, you're taking term premium risk because of this fiscal exuberance that we're seeing around the world. Then elsewhere in fixed income markets, let's talk about credit markets. A bit similar to equity markets, we've had a strong rally in credit markets in the last 4 to 5 months. Credit spreads in both the higher yielding and the investment grade parts of markets, both developed and emerging markets, have tightened considerably. We're not far away from all-time tights in credit spreads. There's still a bit of risk premium in emerging market debt, particularly hard currency, corporate and sovereign debt, but clearly spreads are much lower than where they were 3 or 4 months ago. And so a bit similar to equities, I think that credit markets, you also start to need to be a bit more selective, avoiding those credit markets where the outlook for the fundamentals, the credit fundamentals, have not been priced in appropriately by the markets. And so we are a little bit more wary about high yield now because spreads have compressed a lot, but actually the corporate fundamentals of high yield borrowers are a bit more stretched than the credit fundamentals of the high quality larger corporates. And so we think that even though credit spreads are super tight in investment grade, to some extent the corporate fundamentals support it, whereas in high yield it's a bit more of an uneven picture. And then I think another point to highlight, to mention earlier about inflation, we think that the path of inflation is somewhat uncertain at this point in time. Different sectors in the economy are seeing rising inflation or re-accelerating inflation. Other parts of the economy are seeing disinflation. But in a situation where you think that inflation will be more volatile and maybe with a slight upwards bias, inflation-linked bonds and floating rate notes become a nice diversifier in your fixed income portfolio. So the benefit of inflation-linked bonds and floating rate notes is they react to higher interest rates or higher inflation break-evens in the market. And so it gives you that diversification should inflation start to pick up again. And then just to sort of wrap that all together, even in inflation-linked bonds, you can decide which point on the curve you want to be. So we prefer the shorter dated TIPS or inflation-linked bonds up to about 3 years, because if we do see a re-acceleration in inflation, it's much more likely that markets will price that in shorter-term inflation expectations rather than longer-term inflation expectations, because then the thinking would be, well, if inflation is picking up again, maybe the Fed needs to pause its rate cuts. And so you see the back end of the curve start to get pushed higher in yields again. So all in all, moving into a more selective part of the cycle, but also plenty of opportunity as well.
Baik, oke, thank you. Baik Bapak Ibu, tadi pertanyaan saya adalah tentang obligasi. Obligasi ini kan bond yield-nya sudah turun, padahal kita tahu hutang akan naik, tapi harganya malah naik. Harusnya kan kalau hutang tambah besar, berarti harusnya yield obligasi lebih tinggi supaya investor mau beli. Tapi sekarang yang terjadi tidak demikian. Nah jadi tadi yang membuat pasar obligasi bergerak sekarang ada 2 hal. Kembali ke moneter dan fiskal. Kalau moneter itu berarti suku bunga diturunkan. Makanya tenor pendek semuanya turun. Kita bicara global bond. Tetapi yang tenor panjang, itu yield-nya naik Bapak Ibu. Tadi Pak Haryanto juga sempat presentasi di pagi. Kenapa naik? Karena investor tahu negara-negara ini sedang menambah hutang terus-terusan ke depannya dalam jumlah yang cukup besar. Jadi orang nggak mau beli yang tenor panjang. Ini kita bicara di global market, global bond. Jadi kebanyakan beli yang tenor pendek. Nah, alasan kedua adalah tentang inflasi. Memang inflasi kelihatannya sudah tidak akan terlalu mengkhawatirkan. Tetapi kalau nanti misalnya inflasi kembali naik secara tidak terduga, maka the Fed mungkin tidak bisa potong suku bunga seagresif itu. Artinya yield mungkin akan sedikit agak naik. Kesimpulannya menurut Mark lebih baik, lebih prefer posisi itu di tenor pendek. Pendek sampai menengah. Karena kalau ke tenor panjang memang yieldnya menarik, tetapi risiko kreditnya itu memang sedang cukup besar. Itu kita bicara global bond market. Belum tentu sama dengan Indonesia, nanti sesi setelah ini akan membahas tentang konteks Indonesia. Gitu ya. Tapi ini kita sedang membahas konteks global bond market. Kira-kira demikian Bapak Ibu. Saya izin untuk masuk ke pertanyaan berikutnya. Right, so we'll move on to US equities. So I'll be asking this to William. So the end of US exceptionalism narrative emerged after the Liberation Day, April 2025. But then Donald Trump said it is the best time to buy, and that's actually the bottom, right? And the market has gone up all the way up until today. And as we can see from the screen, this is actually the best market rebound in many years of crisis. Yeah. And then my next question will be, let's take a longer term view, right? Is the Trump presidency actually good for the US market? Or actually it's hurting? Because talking about economic theory, it should be hurting US economy. But the reality is the market is partying like there's no tomorrow. So what is your take on that? Thank you.
Yeah, that's a great question. Let's talk about April for a second, because I think that characterizes things in this administration quite well. So rightly, as you pointed out, April 9th, after there was a pause put on U.S. tariffs, markets had the single best day going back over decades. In fact, the MSCI IT index posted its single best day since the inception of that benchmark. But going back to the question that you asked, is Trump good for markets from a longer term perspective? It's challenging to probably see that more in the short term, but over the longer term, we believe that when it comes to policies that are pro-growth and stimulative for the US, yes, in general, Trump's intentions are to be good for US markets. That doesn't always work out the same in a great way that he wants it to, and I think tariffs are one way where we see that, partially because of the way that it's alienated a lot of allies globally. In another way, certainly creating uncertainty for businesses. So if you're thinking about perhaps investing in your own business, but now you're not sure where you should be investing because tariff rates are changing on a week-to-week basis, that start and stop makes it tough for businesses to gain confidence. Over the longer term, if we think about the now legal contest being faced by the White House with regards to tariffs, that continues to erode some of the confidence that businesses have in this administration. But nonetheless, I mean, when you think about the intention of what he's trying to achieve, we've seen year over year revenues associated with tariffs increase almost fourfold. Last year, the White House, or the US government received about $6 billion in tariff-related revenues. This year, it's almost up to $30 billion. That's certainly a good thing. Now, certainly, I think what businesses are thinking about, though, is there going to be a return to certainty? Is there going to be a return to an environment that's a bit more predictable? And I think that's some of where the challenge has been. But nonetheless, the things that the Trump administration is investing in, for example, reshoring and manufacturing being brought back onto the US, it's not necessarily for kind of consumer staples or goods like that, but when you think about the things that the White House are quickly advancing and making more productive to make within the US, let's talk about data centers, for example. There's been subsidies given and basically tax credits included in the big, beautiful bill that was recently announced. So semiconductor manufacturing that can be brought back onto the United States and now involve tax incentives to be able to do that. When we think about the joint ventures that were announced, the Stargate project between OpenAI and Oracle, for example, with the intention of making it the largest data center within the United States, these are the sort of contests that the US wants to win. It recognizes that the productivity gains from being first within generative AI and creating the best sort of models are contests that the US wants to lead in. So when you think about basically what fuels that, there's been executive orders that have recently been announced that basically fast-track projects to be able to produce 500 megawatts at a minimum to put up new power centers in the United States. So when we think about the ways that the administration could be positive over the longer term, it's shown that it can move quickly when it wants to in areas that it think it can be more productive and ultimately beneficial for American businesses.
Alright, thank you. Jadi Bapak Ibu, tadi pertanyaan saya adalah tentang pasar Amerika. Di bulan April ketika Trump baru menjabat ada narasi US exceptionalism itu akan hilang. Artinya uang itu nggak akan masuk ke Amerika saja, sekarang akan mulai keluar. Tapi kemudian Donald Trump nge-tweet ya, kalau Bapak Ibu ada yang tahu, this is the best time to buy, dan itu betul-betul bottom-nya Bapak Ibu. Nggak ada market yang lebih rendah dari titik itu sampai sekarang naik terus. Ya, nah pertanyaan saya tadi adalah apakah ini bisa bertahan untuk jangka panjang? Apakah semua kebijakan Donald Trump ini sebetulnya bagus atau tidak untuk Amerika? Nah jawabannya tadi secara short term itu memang jelas akan bagus. Karena yang tadi pertama dibahas tentang tax, tentang pemotongan pajak. Kalau perusahaan pajaknya dipotong, artinya profitnya lebih tinggi. Kalau profit lebih tinggi berarti bisa hire lebih banyak karyawan, bisa ekspansi. Artinya setidaknya secara short term itu akan membantu bisnis-bisnis di Amerika. Kemudian dengan tarif itu juga harapannya bisa membuat American companies itu lebih kompetitif, walaupun mungkin tidak semudah itu, tetapi negara at the same time juga dapat uang dari tarif supaya bisa meng-offset tadi penurunan pajak. Nah, yang Trump juga sangat fokuskan tadi sudah dibahas berkali-kali adalah deregulasi, membuat bisnis itu semudah mungkin berkembang dan bisa cepat sekali, tactical. Jadi kalau ditanya 5-year plan mungkin belum tentu ada dari Donald Trump. Tapi mungkin 3 months plan mungkin ada ya, karena yang mana yang karena Trump ini businessman, di mana ada opportunity dia akan langsung execute, gitu ya. Dan yang terakhir tadi disebutkan juga tentang AI, Bapak Ibu, data center, dan Pak Raden tadi mengatakan harga mati untuk Amerika, AI race ini harga mati, Amerika harus menang. Dan itulah yang membuat juga pasar saham Amerika ini ditopang sebenarnya oleh cerita AI. Yang kemudian sekarang mulai menjalar ke seluruh dunia termasuk di Asia, nanti kita akan bahas Bapak Ibu. Nah, saya izin lanjut ke pertanyaan berikutnya. So I'll be asking to William again. So talking about valuations, US market is definitely one of the highest and I'd say the most demanding, but it stays for many years now. So are these premium valuations really justified by the superior earnings growth and the AI narrative? Because all seems to be depending on this AI story, but actually, is this the right valuation?
Yeah, definitely. So if I think about the returns of the technology sector over the last 10 years, information technology has been one of the top 5 returning sectors, with the exception of maybe 2022 with the large backup in rates, where we saw a pretty large sell-off in that sector. Now, having said that, it's really being driven by this theme of digital transformation, which really pervades a lot of different ways that we work and that we live. And we think that is something that is likely to continue. We see that as a macro trend that will persist. But to address this question of valuation, let's compare what we see now versus what we saw during the dot-com bubble. And I think maybe one way to look at that is to take one company that was well known for the development of and kind of build out of the internet, Cisco Systems, and a company that many people now associate with the build out of generative AI, NVIDIA. So if we look at Cisco and what multiples were back then, it was trading about 131 times earnings. And what we see is NVIDIA is trading at about a fraction, about a quarter of that currently. And then more interestingly is look at the profitability of these businesses. Back then, Cisco had about a 25% operating margin versus NVIDIA, who has an operating margin of nearly double that. But I think more importantly was to look at the consumer health. Who is buying Cisco's products versus who is buying NVIDIA's products? Back then, it was pretty much anybody who could add .com to their name, and you had an internet startup business. Compared to now, you have all the hyperscalers who are flush with cash, who are the customers of NVIDIA. And when you think about some of the cluster sizes of data centers getting built, right now, the largest data centers are about 100 to 300,000, depending on the project that you're thinking about. There's already plans to build clusters that are in the million to 2 million range, so nearly 10 times the size of data centers that we currently have. So we think the runway for the demand for some of these products continue to be the case. And when we think about the competitive dynamics and where they're currently trading at, we don't find them that demanding. I mean, by comparison, it's not listed on here, but you could take a company like Walmart, you can take a company like Costco, for example. These are in the consumer retail business. And those trade twice at the multiples that NVIDIA trade at. So simply put, while there may be some volatility associated, we think there's continued demand and we don't think these valuations are necessarily stretched.
Right, thank you. Bapak Ibu, tadi pertanyaan saya adalah kita setuju teknologi AI ini barang bagus, itu fundamental. Tapi valuasinya ini mahal atau murah? Ya kan barang bagus bisa mahal, bisa murah, bisa fairly valued. Nah jawabannya tadi menurut William adalah ini memang tinggi valuasi, tetapi dibanding dulu .com bubble, contoh Nvidia itu PE ratio-nya, price to earnings ratio itu cuma 28 kali. Dulu Cisco itu 131 kali. Artinya perbedaannya jauh sekali. Dan zaman dulu perusahaan internet ya ceritanya aja internet karena orang baru ketemu internet. Tapi profit gak? Tidak. Apakah punya cash? Tidak juga. Nah tapi kalau sekarang ini perusahaan-perusahaan AI, ya bukan AI aja ya, teknologi yang besar, Magnificent Seven, free cash flow-nya, cash-nya itu besar sekali. Profitnya itu puluhan billion US dollars per tahun dan itu translate ke cash. Nah, yang membuat tadi William mengatakan valuasinya memang tinggi, tetapi ini masih punya room untuk run. Artinya masih bisa naik harganya, karena data center aja katanya kebutuhannya ke depannya nanti itu perlu kira-kira 10 kali lipat dari yang sekarang. Jadi bisa dibayangkan itu kenapa saham-saham seperti Nvidia ya, seperti semiconductor companies di Asia juga ada, itu naiknya luar biasa Bapak Ibu, karena kebutuhan itu sangat tinggi sekali. Dan ini kelihatannya bahkan belum kelihatan puncaknya akan di mana. Jadi kesimpulannya fundamental barang bagus, valuasi memang nggak murah, agak mahal, tetapi memang karena potensinya itu masih banyak. Baik, saya izin masuk untuk ke segmen China Bapak Ibu. Tadi kita sudah bahas multi asset, kita bahas Amerika, sekarang kita bahas China. Now I'll be asking question to David. So in China, actually we have quite a lot of problem as well. The property sector crisis, industrial overcapacity, trade war, and so on. But actually we have been experiencing these problems for the last maybe 3 to 4 years. And I don't think there is much improvement on that. Consumer confidence is also quite low. Household saving is around 25% of the China GDP, despite all the fiscal and monetary stimulus. So what else can the government and central banks do? Will China be able to, rebound because of AI, just like what US experienced? Thank you.
Thank you. I think this is a topic I can speak for 2 days non-stop, because the challenging is really real and they are really big. Like all the issues you read in the media actually is true and remain challenging today. Demographics, overcapacity, and then very one-side economy to the manufacturing, and then all the government debt and poverty. These are big issues, and actually at this moment, unlike in the past cycle, I can confidently say that there's no one magic bullet. There's no one big bullet or policy they say 5 trillion solve everything. No such things. All these issues basically is deep root, and they basically lead Chinese government to do many things right in the same time to slowly steady the ship. So that's the first basic point. And then the second very important point is actually if we look at the key components of the economy. GDP actually is made up of labor growth, capital intensity, and then productivity. China has already exhausted the first 2 factors. No longer to have population growth, and then capital intensity, they invest a lot already. So the marginal returns are diminishing. The only thing left for the economy is actually productivity gain. That's why the government has gone all in to try to promote the advanced manufacturing. It's very important to them, and that's why there are all kinds of different measures try to promoting, like from energy transition technologies to EV, to AI, to quantum computing. These are the next step of the economy, no longer about property, no longer about infrastructure. But what is important for us to realize, the third point is related to the first one. If there's no magic bullet, then we shall not expect Chinese government to put the economy on steroid again. Like in the post-GFC, the 4 trillion stimulus, or the 2015, the urban renovation project, we shall not expect such things to happen unless things get really dirty, really bad. But now actually is not doing okay, but actually also is not totally out of control. So what the government doing right now is not to put the economy on steroid. Instead, what they're doing is try to steady the ship. It's a big difference. Try to steady the ship, meaning that when the things are going a bit bad, they will push up a little bit, but not to overheat it. You can think about the Chinese economy nowadays as something like a department store. Inside the department store, there's a lot of beautiful goods, beautiful dresses, a lot of things you want to buy. But the department store itself is really broken in some way. The walls are falling off, and then the lighting is like almost going to come off. So what they try to do is to make the department store just okay, but not glamour, and then let the good itself to shine. What are the good itself is really the private economies. So number one, steady the ship. That's where the 1, 2, 3 punch. Number one, monetary easing. Number two, fiscal stimulus. Number three is the structural reform. Number one, number two is easy to understand. Number three is more painful. It really takes time to see the impact, but they are slowly doing it, okay? For example, the shift of the economy to the consumption, they are slowly have different measures, including incentivize more money to flow into the private market by providing more elderly care, child care. But this is a small baby step. It's not the one magic bullet. For the economy to truly shine through, the important thing for them is to provide the floor, just that there's no more worsening of the situation. But how to make the goods itself in the department store to shine through is the key. There are two very important steps to re-energize the economy through providing the confidence. What Chinese lack right now is really the confidence because of some of the policy misstep or unfortunate things happening in the past, in the COVID, plus the external pressure from the geopolitical tension. But to provide the confidence, it's easy to lose one, but it's very hard to regain one. So they're doing it step by step. This year, they have launched the private economy bill, which is a very important step to make sure that there's no more abuse of the private enterprise, protecting the right, make sure they can earn their money in the right way. And for the company, for the business people community, they have a meeting with Mr. Xi, the president, in the beginning of the year. It's a very symbolic, but it's a very important meeting because it signals that actually the government is now really stepping out of the zone in the past and pointing into a new direction for this private enterprise to shine. We have seen many of the private enterprises again get the backing to come to the market to list. So this is a very important step because only with the regaining of the confidence of the private enterprises, then they can hire more people, we invest more into the economy, then the confidence can come back. So let the confidence come back is very important. Secondly, is really the property. What they could have done more, I think, is the property side is very important. Property is a very deep root issues, but again, for them, it's not to create another bubble, but try to steady the ship by some of the baby steps, by having more direct government intervention in the market. I think this is something an area they may be able to do more, using more central government financing, and then using more central create entities to buy up some unused inventory, and then let the market to heal by themselves. But they probably will not make the mistake like in the 2015-16, have a big boom to the market to create a bubble. I don't think it's going to happen. And last but not least, to remake the market to be less one-sided but more balanced, meaning more consumption, is at the end of the day is really about regaining of the confidence. That's the most important part. But even say China is going to have that balancing, more consumption, we shall not be mistaken to say that China will be like US.
Manufacturing will always be very important in China because of the base of the population is so big. They need a big segment that can create a lot of jobs. But the manufacturing going forward is also going to be very different. It will be less labor intensive. It will be more digital, more automation, and more robot. And then within the consumption, it's not about buying more goods anymore. It's also create more experience-based consumption. Travel is a very important thing. Entertainment, live event, like concert. And servicing is a big industry that is not very easy to replace by robots. So this is an area that not only to create more jobs, but also to create more engine for growth for the Chinese economy itself. But the bottom line is that even with a more balanced economy, manufacturing will always be important in China's economy itself.
Right, thank you so much. So that's about 2 days, right? Ya Bapak Ibu, tadi saya bertanya tentang China. Sebelum saya bacakan pertanyaan tadi Pak David bilang, oh kalau bahas ini saya perlu 2 hari katanya. Jadi ya lumayan ya, dipersingkat langsung dalam berapa menit. Pertanyaan saya tadi, China ini problemnya banyak sekali. Kita tahu sampai sekarang krisis properti belum selesai, banyak overcapacity, makanya barangnya banyak juga masuk ke Indonesia ya Bapak Ibu, barang-barang murah. Trade war juga masih ada, tapi ya selama berapa lama ini kayaknya nggak ada improvement. Padahal pemerintahnya sudah kasih kebijakan fiskalnya sudah longgar sekali, stimulusnya potong suku bunga terus, tapi ekonominya nggak banyak bergerak. Nah pertanyaan saya tadi, pemerintah dan bank sentralnya harus ngapain lagi supaya China itu bisa growth-nya nanti naik lagi. Nah ternyata jawabannya pemerintah China sudah berbeda, sudah nggak bisa growth-nya 8%, 10%. Jadi mungkin 5% saja sudah bagus. Dan sekarang fokus pemerintah China itu tidak mau berhutang sebesar-besarnya sehingga ekonomi nge-boom seperti 30 tahun terakhir. Mereka maunya benar-benar lebih quality, tetapi lebih pelan. Jadi pertumbuhan ekonominya memang China nggak bisa seperti yang kita lihat dalam 30 tahun terakhir. Dan katanya nggak ada magic bullet, jadi nggak ada satu peluru ajaib yang bisa solve semua permasalahan ini. Akan perlu waktu. Tapi yang China lakukan adalah dia fokus ke structural reform. Dengan cara apa? Productivity. Karena dari segi population itu sudah dilakukan, populasinya dibikin sebanyak-banyaknya orang supaya ada yang konsumsi dan ada yang bekerja. Kemudian dari segi capital, investasi sudah luar biasa. Nah yang sekarang mau dilakukan adalah dari segi productivity. Dan ini selaras dengan yang tadi Pak Haryanto, Pak Raden katakan. Memang ini mau nggak mau harus involve teknologi Bapak Ibu. Jadi China tetap akan jadi pabrik dunia, tetapi nantinya mungkin tidak labor intensif. Artinya kalau zaman dulu yang penting banyak orang ya, banyak yang kerja di pabrik itu. Makanya China menang. Sekarang berbeda. Productivity bisa jauh lebih kencang karena kalau di Amerika kita bicara AI, di China kita sudah masuk ke robotics juga ya kalau kita perhatikan. Jadi memang China akan fokus ke productivity yang sangat tinggi, itu kunci untuk China. Dan yang terakhir, yang sangat penting untuk pemerintah, saya rasa pemerintah Indonesia bisa juga ya belajar dari case study ini, adalah confidence. Di China itu memang confidence rakyat untuk konsumsi itu memang masih rendah. Agak mirip ya sama Indonesia juga ya, bedanya di China uangnya ada, 25% tabungan rakyat itu nilainya sama dengan 25% ekonominya. Kalau di Indonesia beda, udah banyak orang mungkin nggak terlalu mau konsumsi, tabungan nggak lagi banyak juga. Nah, jadi mungkin ada PR tambahan nih bagi kita. Nah tapi kira-kira itu Bapak Ibu di China gambarnya. Sekarang saya akan tanyakan mengenai marketnya ya, tentang China ya. Okay, the next question will be the equity market performance. For the past few years, it's always the laggard, right? It's always fell behind. But this year, China stock market performed very, very well. As we can see from the screen, from this chart, China is the purple one, is almost always at the bottom. But this year, it's actually, year to date, it's actually the highest from MSCI China. So what are the key drivers behind the rally? Because about 1 year ago, many investors said that China is not investable. We will not go into China. And then the next year, the market outperformed almost any other market. So what is the driver behind the rally, and what will be is it the same driver that will drive the future performance going forward? Thank you.
Okay, thank you for the question. I think year to date, if we look at MSCI China, it's already up 30%. It's unimaginable for me to think about China can go up another 30% for the rest of the year. Even actually there's still good news to come, the interest rate cut, and then the potential deal struck between Trump and Xi themselves. They are good news, but I cannot imagine China to go up by under 30% to some degree. And as a matter of fact, if I look at certain element of the market, like the domestic AI infrastructure play, some of that is overheated, okay? So correction could come quite soon in the next few months. And we are now getting to the end of the year, many managers are eager to sell to take the profit. However, I would say that over the next 6 to 9 months, or even on a medium term, 3 to 4 years, there are ingredients in place to have a sustainable rally. First of all, if we look at the technical factors, first quarter this year, only the big cap internet have a run. But starting in the second quarter, the kind of stock and sectors that go up has broadened out. Aside from the big cap internet, now also consumer, financials, materials, and industrial, they all have a run going up. This is a very positive sign when a stock market, there are more stocks going up rather than in a very narrow pocket of stocks. Thirdly, even Chinese earnings are not out of the wood. We have seen the earnings some signs of bottoming. All these three factors point to the fact that actually there are more legs to come in the 6 to 9 months. So with this correction, I will also say that any correction could be narrower than before, and then the recovery can also be faster. One of the key reasons for that is actually nowadays, Chinese market no longer is about a valuation story. As I mentioned before, valuation chip alone can only carry you that far. Equity market need a story, like the Japan market, they have the corporate reform story. And now China has a story. It's really, as I mentioned previously, like a department store, there are really a lot of beautiful goods in the department store. But previously, people only focus on the macro, on the top level, because of all the issues. But underneath the surface, there are lots of great companies. The DeepSeek moment basically is a awakening call to a lot of people, realizing that, okay, maybe US have Magnificent 7. Why cannot China has fantastic 17 or even wonderful 700? DeepSeek is not a singular company, singular moment. There are DeepSeek kind of companies across the board in China, from technology to industrial to even consumption and biotech space everywhere. There are lots of uncovered jewels out there for us to find, okay? So that is a very important point to remember. And right now, actually, what China is going through is similar to the 2014-15. In that time, when China has the first 4G network, it's not perfect, but you know what? It's workable. And the biggest learning lesson back then is when China have a workable infrastructure, the downstream application went very fast. That's the beginning of the great mobile internet era of all these great companies that we have learned today, like Tencent, Alibaba. They all come out from those ages. Right now, China is entering another era, which is very similar in the AI. China does not have TSMC. China does not have NVIDIA, but you know what? China start to have something workable. It's not perfect, it's not the cheapest, but something workable. So West can be assured the next 5 years later, China will close the gap further in the AI infrastructure. But what is more important is like the downstream application, there will be a lot of new exciting things coming up. Humanoid robot, autonomous driving, these are all things that's already emerging on the horizon, and they will really run faster. So what we see right now, my concluding remark, I think, about this point is like, what can carry the Chinese market forward? There are 4 big themes that we see. Number one is innovation. I mentioned that it's not a singular DeepSeek moment. DeepSeek kind of companies across the board in different sectors. Secondly, industry upgrade. Industrial component is used to dominate by Western firms or Japanese firms, but these days many important component. Chinese component are not about cheap enough, but actually it's also good enough to be used in high-end applications like cars and humanoid robots. And thirdly, lifestyle change. It's true that the Chinese consumption money pie is still stagnant, but within the pie there are certain pockets growing very fast. Again, like experience-based consumption like travel, small toys, concert, those things growing very fast these days. Last but not least, consolidation. There will be many companies cannot survive, but the one that are standing till the last are the one that will reap all the benefits. So within the space, there are still a lot of stories to catch in China. That's the key reason why the market still can sustain going forward.
Alright, thank you. Jadi Bapak Ibu, pertanyaan saya tadi, pasar China ini sudah ketinggalan bertahun-tahun, dan tahun lalu juga selalu dibilang China itu non-investable. Saya nggak akan taruh uang di China. Tiba-tiba tahun ini performanya bagus sekali Bapak Ibu. Dan ini juga didrive oleh asing juga, bukan hanya domestik, tapi asing juga banyak masuk ke China. Karena tadi ya yang kita cerita di awal, keran air dibuka, fiskal moneter dari Amerika naik, Eropa naik, Jepang naik, China sekarang naik juga. Dan tadi pertanyaan saya, apakah ini bisa berlanjut? Kedepannya ini China, apalagi yang bisa membuat China terus berkembang. Dan tadi secara kesimpulan dikatakan inovasi itu sangat penting. Jadi kalau tadi kata Pak Raden, Amerika melihat AI itu harga mati, buat China sama juga Bapak Ibu, harga mati juga. Ya bahkan sekarang mulai ada perang ya, China tidak mau pakai chipnya Nvidia, dia mau pakai chipnya sendiri. Jadi China itu tidak seketinggalan itu sebenarnya. Amerika juga cukup was-was, China ini cukup cepat catching up-nya walaupun startnya telat ya. Kemudian industrial upgrade yang tadi kita katakan productivity-nya tetap akan jadi pabrik dunia, tetapi productivity akan jauh lebih tinggi karena teknologi. Kemudian tadi ada satu hal yang mungkin saya perlu highlight, Pak David mengatakan in the short term ini market China naiknya sudah lumayan, tapi pemerintahnya berbeda dengan zaman dulu. Kalau Bapak Ibu ingat 10 tahun lalu di 2015, supir taksi pun bisa memberikan rekomendasi saham di China. Dan mereka beli saham pakai margin Bapak Ibu, pakai hutang. Dan kenaikan harga sahamnya seperti ini. Habis itu 3 bulan kemudian bubble-nya pecah. Kali ini pemerintah tidak mau itu terjadi. Jadi ketika pasarnya sudah naik cukup tinggi, pemerintah agak ngerem. Tidak boleh beli saham pakai hutang. Jadi pemerintahnya sudah agak berbeda mindsetnya dan lebih mau sesuatu yang lebih bertahan lama ya. Dan kalau nanti ada aksi profit taking sangat wajar karena kenaikannya juga cukup lumayan. Tapi untuk China ke depannya tetap masih sama, itu di inovasi teknologi dan yang tadi saya katakan Amerika masih fokus di mungkin software ya, di AI, di China sudah mulai masuk ke robotics. Nah ini yang mungkin nanti bisa jadi salah satu yang bisa merubah dunia juga gitu ya untuk ke depannya. Okay, I will move on to Mark. This is the last question for our session. According to IMF projections, Asia Pacific economies contribute to almost 60% of world GDP growth. But its share of global GDP is only 40%, around 40%. Inflation in Asia has moderated faster than in many regions, especially in the developed market, that it allow their central bank to cut rates before the Fed can cut, right? It is also the heart of technology suppliers and at the same time, the biggest consumer. And also one of the main target of Donald Trump's tariff. So explain to us what are the risks and the opportunities for Asia Pacific market? Thank you.
That's a great question. So you're right to point out that Asia is really the growth driver of the global economy in the 21st century. And that's not just a single country story. We think about Asia as a homogenous region. It's really not. You've got different types of economies. You've got export-oriented economies. Think of South Korea, Taiwan. You've got domestically driven structural growth stories like India and Indonesia, demographic tailwinds, under-penetration of banking and consumption activities. And in the case of China, you've got a hybrid model, like an industrial model, export-led model, albeit with a high degree of innovation, progression in the last decade or so. So different economic models, but collectively speaking, a powerhouse contributor to global growth for the next 50 to 100 years. Now, that doesn't mean that it's plain sailing a straight road ahead. Clearly, we've seen, as a result of industrial policy, tariff policy, geopolitical tensions, those open economies, or those economies that are dependent upon exports and benefited strongly from the era of globalization, are facing headwinds, challenges to their current economic model as a result of the policy shifts that we've seen. In addition to that as well, some of the demographic challenges that Western economies have been facing already for decades are now starting to be faced by economies in Asia, but China in that category as well as Japan, for example. And in addition to that, we've also got, historically speaking, the extent to which policy continuity, corporate governance, the risk premium that global investors have required to invest in Asian markets has been a bit of a hindrance to those economies being larger weights in global equity indices. On that last point, we actually see significant progress, and that's what gets us excited in terms of some of the nearer-term opportunities in Asia. If you think about Korea, we had a period last year of significant political turmoil, which was effectively resolved by a decisive election win earlier this year. And that's created a real wave of optimism around having visibility over the policy outlook for the Korean economy for the next 4 to 5 years. In addition to that as well, almost borrowing a leaf from the Japanese example, Korean government is now focusing on what's called the Value Up program. And that is a program which is designed to effectively boost shareholder returns and policies that are more shareholder friendly by corporates in Korea. So things such as trying to clamp down on cross shareholdings, boost balance sheet efficiency, raise returns to shareholders either via dividends or share buybacks. All of those things start to tackle that valuation discount historically as a result of corporate governance reform. In addition to that as well, as I mentioned earlier, Japan has already, as a result of activist investors, but also government policy, been addressing quite successfully the corporate governance historical overhangs. And if you look at the Japanese equity market now, it trades on mid-teens valuation multiples, whereas for a long period of time, the stock market in Japan traded on high single-digit multiples. So there's a case study for Korea about what is possible if policymaking becomes a better servant towards investors, both large and small, in the local equity market. So Korea is a story cyclically which is doing a lot of good things, which is countering some of the pressures it feels as an economy as a result of export markets coming under a certain degree of cyclical and secular pressure. Beyond that, as well as an investor, we're looking for other examples where governments are effectively supporting their capital markets either via reform or capital deployment. Another example of that is Singapore, which is where I'm based. The Monetary Authority of Singapore a few months ago announced a multi-billion-dollar program of awarding mandates to institutional asset managers to set up funds to invest directly in Singapore equities. Initially the small and mid-cap space, but then moving more also into the large-cap space. That creates a significant tailwind in terms of capital deployment into the Singapore equity markets, which historically have been seen as somewhat of a local opportunity, not necessarily something that is of interest to global investors. So that is an example where government policy is working in a favourable and aligned direction towards the needs of investors as well. So we think that Singapore equities also look strongly positioned over the medium term as a result of government policy. And then if we go back to the kind of market landscape and the investment opportunity landscape that we're seeing at the moment, if we believe that valuation multiples in certain markets are looking somewhat full, if we believe that the growth outlook is moderating somewhat, then you probably need to shift your mindset as an investor to not just be seeking returns from capital gains, but also income as well. So we like equity markets that give you a good total return, dividends, buybacks, plus earnings growth. And whilst in the last couple of weeks it's seen some profit taking, Australian equities had done very well in the second quarter of this year. It's a market with a strong discipline towards shareholder returns, particularly dividends, and the taxation treatment of dividends is very favourable. And it's also a market with a fairly diverse sector breakdown. So you've got mining companies, real estate companies, consumer companies, industrial companies as well. And these are companies which are seeing, in some cases, strong up cycles in their earnings momentum, in other cases, benefit as a tailwind from declining interest rates as well. So I'm mentioning different examples of opportunities across the region, and it's re-emphasizing the point that Asia is a heterogeneous region. Lots of different stories, different economic models, but there's one underlying theme. You want to see policymakers doing the right thing by shareholders, by investors, and actively working towards a policy mix which has positive, both direct and indirect impacts on the local economy. And then just a final point about Hong Kong, China as well. Yeah, it's had a very, very strong year to date. It's a market historically over the last 10 to 15 years which has been deeply volatile. You have years where it's down double digits, years like this year where it's up double digits. It's a case in point where as you move into a more selective part of the market cycle, your need to demand an attractive valuation entry point becomes that much more important. So whilst the rally in Hong Kong, China equities has meant that the market is no longer as discounted as it was, it still screens quite favorably from a global equity market context. And then there are a number of other markets in Asia as well, which also trade at a significant discount to developed market equities, not just the US, but also Japan as an example, and latterly Europe as well. So in general, good valuation opportunities, good total return opportunities, and we're at an inflection point in terms of more benign supportive policy making by domestic policymakers.
Alright, thank you so much. Bapak Ibu, tadi pertanyaan saya tentang Asia Pasifik. Tadi kita sudah bahas Amerika, sudah bahas China, tetapi ternyata ada satu pasar yang sangat menarik, yaitu Asia Pasifik. Sedikit statistik, menguasai 40% daripada ekonomi global. Tetapi pertumbuhannya, kontribusinya 60% terhadap pertumbuhan ekonomi global. Artinya walaupun porsi 40%, tapi berkontribusi ke pertumbuhan 60%. Artinya Asia Pasifik ini grow-nya lebih cepat daripada dunia, Bapak Ibu. Tetapi at the same time ini banyak sekali negaranya ya, kita ada di luar China tadi, ada India, ada Taiwan, ada Korea, ada Hong Kong, ada Indonesia. Nah ini mungkin saya izin jelaskan sedikit-sedikit pasar yang cukup menarik. Kalau Indonesia sama India itu demographic tailwind, jadi karena orangnya banyak, konsumtif, muda-muda, itu cukup menarik ya buat investor. Nah yang menarik sekali tadi dibahas adalah Korea Selatan Bapak Ibu. Walaupun ada kejadian politik ya, kita tahu sempat ada kudeta di presidennya dan kawan-kawan. Tapi ternyata pasar sahamnya naiknya tinggi sekali. Karena dia mengikuti apa yang dilakukan oleh Jepang. Jepang marketnya 2 tahun terakhir naiknya tinggi sekali karena melakukan corporate governance reform. Biasanya perusahaan Jepang itu jarang mau bagi dividen. Jarang mau melakukan shares buyback. Jadi akhirnya ya ngandelin capital gain saja. Nah sekarang itu banyak diubah, perusahaan harus lebih transparan. Korea mengikuti approach ini dan ternyata berhasil. Jadi pasarnya naik cukup tinggi dan kita tahu di situ ada 2 perusahaan ya, Samsung dan SK Hynix. Itu dia adalah produsen semikonduktor terbesar juga di dunia dan dia sangat diuntungkan oleh AI story di dunia ini. Nah, kemudian tadi ada juga Australia. Kita tahu Australia itu kuatnya di pertambangan ya, batu bara dan juga properti juga. Jadi cukup menarik. Dan Hong Kong adalah proxy dari China market karena China-nya bagus sekali, pasar Hong Kong juga luar biasa naik tinggi. Nah, tadi note dari Pak Mark adalah walaupun naiknya udah lumayan, tapi valuasinya itu masih lebih murah. Karena kalau kita flashback 3 tahun terakhir, Amerika naik terus. Kemudian diikuti Jepang. Tahun depannya lagi Eropa mulai naik. Nah China baru mulai naik tahun ini. Jadi walaupun kita lihat year to date-nya naiknya tinggi, tetapi ini masih sangat ketinggalan karena naiknya telat dibanding yang lain. Demikian Bapak Ibu, semoga bisa membantu.